Hello, my dear friends, and welcome to Study IQ. I am Joycey Joy, and today in this lecture we will discuss about foreign investment in India. First of all, coming to the current affairs, India's foreign exchange reserves increased to a 10-month high of $411.91 billion on 31st of March 2019. So, in this context, where there is an 10-month high foreign exchange reserves in the country, we will analyze the status of foreign investment in India. But before we move on, this is our channel Study IQ, and we are providing pen drive courses for various competitive examinations including SSC and bank courses, UPSC optionals, SSC JE courses, teaching examination, railway examination, defense examination, RBI grade B, NABARD grade A, UGC NET, UPSC civil services examination, CLAT exams for various state PSCs and also for various professional courses. You can visit our website www.studyiq.com for more details, or you can call to any of these numbers for more information. Now let us understand the status of forex reserves in India now. So we have seen that according to the estimates as on 31st of March 2019, the recorded forex reserves in the country was around $411.91 billion, which was a 10-month high. So, if we look into the past few months, if we take the month of April 2018, that is almost 1 year back, to October 2018, we will see that the forex reserves in the country were going very down, and by the end of October 2018 it was recorded very low at $392 billion. And this was the time in October 2018 that the value of rupee was very less compared to the US dollar. So this was a record low of 74.34. The exchange rate of rupee to the dollar was 74.34. So with this, what we understand is that the instability of the rupee and the forex reserves are directly related. So what could be the possible reasons for rupee instability? Rupee instability could be due to factors like rise in the crude oil prices, and crude oil is a component for which we are highly dependent on imports. So as an effect of increase in the crude oil prices, the current account deficit will widen. So a pressure on the current account deficit as a result of increase in the crude oil prices was the main reason for the rupee instability. So what we can understand is that whenever the value of imports exceeds over the exports, it is called current account deficit and widening of current account deficit. So whenever there is a widening effect on the current account deficit, it has a direct relationship with rupee instability. The value of rupee will come down, which will lead to depreciation of rupee. So depreciation of rupee will result into instability of rupee as a currency, and therefore the forex reserves also will come down. Now again, the capital outflows by the foreign institutional investors from debt and equity markets were also a major reason. So along with the current account deficit, it was supplemented by factors like capital outflows. Capital outflows, especially from foreign portfolio investors. So foreign portfolio investors, or FPI, is where the institutional investors make investment in the debt and equity markets in India. And this is highly volatile in nature. Whenever there is a fluctuation in the value of shares or value of currency, there can be a great amount of capital outflow from the country. So outflows of capital by the foreign institutional investors from the debt market and the equity market were also a major reason. So these were the two major factors as a result of which the forex reserves of the country fell very low. Now let us understand what are the recent developments in the foreign investment and forex market in India. Now we have seen that the forex reserves are now the highest, and let us understand what are the reasons for this recent developments. So the inflow of foreign capital into India's stock market in the month of March 2019 hit a very high record of $4.89 billion. So one reason for the fall in the foreign exchange reserves in the country was due to the outflow of foreign capital. Now in the recent months, the foreign capital inflow has been recorded very high, and in the month of March alone it has been recorded as $4.89 billion. So when there is an inflow of foreign capital into the country, definitely there is a chance that the forex reserves also will increase. And this is the biggest foreign inflow into Indian stocks since February 2012. And as a result of this, the stock market rose a solid 8% in the month of March. And in the recent few months, the foreign investment in Indian equities were also very high, and it is expected to be very strong in the upcoming months also. So we can say that the record foreign portfolio investment inflows in the recent months has significantly added to the forex reserves in the country, and that is why the forex reserves have recorded a 10-month high recently. Now let us understand what are the other driving factors that has led to the increase in forex reserves in the country. The first one is fall in crude oil prices. So whenever there is a fall in the crude oil prices, the import bill of India comes down. This is because India is a highly import dependent country for crude oil requirements. So when import bill comes down, the current account deficit will narrow down, and this will lead to appreciation of Indian rupee. Indian rupee will gain more value compared to US dollar, and that is one reason. Now the second reason could be an appreciating rupee itself. So whenever there is an appreciation of rupee, it means that the value of Indian rupee increases. So when Indian rupee's value increases, this will help boost the returns in dollar terms for the foreign investors who are pumping money into the Indian markets. So an appreciation of rupee will yield more returns for the foreign investors, and that is why there has been an increase in the foreign investments in the country. Now third factor could be a rupee dollar swap by the RBI. So under a swap, the amount of dollars raised through the swap operations will reflect in the RBI's foreign exchange reserves. So this will also increase the forex reserves of the country. So RBI, or the Reserve Bank of India, the central bank of Indian economy, is the custodian of forex reserves of the country. So when RBI has more dollars from the swap operations, that will also reflect in the quantum of foreign exchange with the RBI. Another factor could be the growth slowdown in the Chinese economy. Now, with the growth slowdown in the Chinese economy, Indian economy has emerged as the fastest growing major economy in the world. So, in the last 1 year, the Chinese economy has been falling. So, now India has the tag of fastest growing major economy. Therefore, the investors expect India to be a major source of global growth in the upcoming years. So, this is favorable for the interest of the investors. Therefore, investors see India as a favorable destination for making investments. Another reason is that the Western central banks, for example, the US Central Bank Federal Reserve, they have relaxed the interest rates. Also, the European Central Bank, they have promised to keep the interest rates low for a longer period of time. So, this has caused the investors to turn towards relatively high yielding emerging markets. So the returns would be higher in India compared to Western countries like Europe and US. So investors are coming down to India in order to make their investments. So we can say that both cyclical and structural factors have resulted into increase in the forex reserves of the country. Now let us understand what is the way ahead. So we have seen that there is a surplus or huge inflow of foreign capital into the Indian economy. Definitely the return of foreign capital or inflow of foreign capital into our economy is a positive sign for the Indian economy. Now what lies ahead is that the policy makers needs to be careful about other emerging Asian economies which will be competing hard to attract foreign capital into their own countries. So in this context, the policy makers should make favorable policies for the country in order to attract more foreign capital and in order to maintain and increase the foreign exchange reserves of the country. And in this context, macroeconomic management, it means that the macroeconomic factors like the interest rates, inflation rates, the returns, etc. should be favorable for the investors to make more investments in the country. And the fiscal deficit of the center and the state governments needs to be addressed. And the country should also take long pending reforms into the agenda, especially with labor reforms, land market reforms, which will help in attaining the long-term growth targets of the country. And structural reforms are also very important in order to gain the confidence of the investor. You can find the PDF of this lecture on my Facebook page, and for any queries regarding your preparations, you can get in touch with me on my Facebook page, or you can email me at joycey.studyiq@gmail.com. You can also follow my Facebook page for more video updates. Thank you.